Everybody, I'm Hill Harper, and you're listening to Five-Factor Authentication, a podcast about our constantly evolving relationship with technology. Brought to you by Norton. Today's show is all about online banking and social equity. And if you're wondering how those two tie together, you're in luck, because I got somebody who's incredible. She's outstanding. She's just amazing. She's the youngest woman in America to own and operate an online bank. Now, Sheena Allen is an amazing visionary in online banking and just a visionary in life, I'm telling you. And the founder and CEO of the fintech company and neobank Capway, and Sheena Allen Apps, a mobile app company she built from the ground up in 2011 to millions of downloads. She's made it her mission to connect millennials and Gen Zers to today's cashless economy. Now, Sheena, we can't wait to hear about your journey and all things about how you see the future of online banking. So first of all, thank you for joining. I'm excited to have this conversation because I've had the good fortune of speaking with you before, and I just think that you are a wealth of knowledge. I think you're brilliant. I think that your energy, I just think you're awesome. So this is just a treat. So thank you for that. Let's jump right in, though. I want to jump in now. Sheena Allen Apps was the company that put you on the tech map, right? You got the idea for your very first app when you were still a college student at the University of Southern Mississippi studying for degrees in both psychology and film. Now, will you talk to us about how you saw the market and what you created and why you created something to fill it?
Yeah, so Southern Miss, I have a Jackson State shirt on, by the way, but I was a Southern Miss. Um, I didn't even know what I wanted to go to school for. So even just a quick backstory to that, even getting to Southern Miss, which got me to Sheena Allen Apps. I want to do art. So I'm really big in art, drawing, painting. And so the reason I double majored, well, one of my majors was film, was because it allowed me to express my artistic side, my creative side. Senior year of college, still kind of just figuring life out. I go to Walmart and I actually had subleased my apartment out that summer. And so I was trying to, buy things to get back in the groove for my senior year of college. And I had this super long receipt, like because I had bought so much stuff from Walmart, it's kind of ridiculous. And I remember I told my
Now,
roommate, she
did you
went with
hear
me, and
about the time that Shaquille O'Neal spent like $92,000 in a Walmart? Something like that? You just remind me of that. But
yes,
so your receipt was really long. His receipt must have been really, really long.
yeah, I don't, in college, you definitely don't have, I think it was like 70,000.
It was
Either
70.
way, you barely have 70 bucks to spend. So
But
it's
it's still a
definitely
long
not. I
receipt.
mean, I think I might.
It's still a long receipt. Even
It was a long
$70 is a
receipt.
long receipt.
Yeah, it was like that CVS receipt. You ever seen the CVS receipts? Oh my
Mhm.
gosh, it's like they just it keeps coming and keep coming. I had this long receipt, and I told my roommate, I was like, I'm trying to find an app that can keep up with my money and my receipts. I want to be able to take a picture of my receipts in case I want to return something, find something. And this was 2011. So the App Store was still very young in 2011. It was nowhere near where it is now. Where now there's millions and millions and millions of apps in the App Store. 2011, honestly, I'm thinking maybe 250, 400,000, which sounded like a lot then, but not in comparison to the millions that are in the App Store now.
Right.
Couldn't find what I was looking for. So I was like, it's not there, so I'm gonna figure out how to create it myself. It was not technical, not in school for anything technical, but that was my first step into technology. And the saying is when you find what you love, you know it. And just the whole process of figuring it out, I knew that tech was meant for me. I completely love the process.
So this is fascinating to me. So there's a lot of people out there that are not coders, they're not engineers, they're not computer programmers, but are creative and or they're entrepreneurial. And you stepped in. Ultimately, you created 5 mobile apps with this company, and each allowed the user to accomplish different tasks. How did you bring about this vision, and how did you have the confidence to do it? And what would you say to other people out there that may be listening? They're like, you know what, I have an idea for something, but I just don't know where to start. I don't know what to do. How did you go from this idea to actually execution? I know that's a really big question because I know that there's a lot of steps, but what would you say to folks to educate them at least initially about what they can do to take affirmative steps to move forward on an idea they might have, particularly in the tech space?
Well, I'm a true believer of putting things on paper. I know we're in a tech world, everything's on your phone, but I am a believer in putting things on paper. So what I did was I actually went back to our apartment, got some printer paper, and I started sketching out like my vision of like how I wanted this mobile app to look. As I mentioned, I wasn't technical, so it wasn't that I just jumped in to try to like code this app that I had this idea for, but I took the visions of it. Um, I took it from paper and then I took it to Microsoft Word, which is not how you design an app, by the way. But I remember, Microsoft Word, you had like little text boxes. And like I was like the text box is like the phone. And that was how I designed my very first mobile app. And I went to the University of Google and I asked Google, how did I find a coder, a developer to help me? And yeah, it pointed me in the direction of a freelance website. And I found someone and I said, hey, look, I have my designs, I have my spec sheet. By the way, I didn't know I had done a spec sheet, but I did. I provided him with everything. It was like, look, I just want you to code from the back end, but before we do this, we have to have a contract that says I own everything. Like it's my idea, it's my intellectual property. This is work for hire. Just gonna hire you to do it, and then everything belongs to me. And yeah, that's my first app.
That's amazing. That's amazing. And so if you were going to tell people, look, you can do this, do you always want to start at the University of Google and allow that to be your groundwork and then move through the process there, or how do you do it? Did you sketch out literally a blueprint from beginning to end of how you wanted it to see and then started following those steps?
Actually, I did. So I literally took every single page, and what I did was like, for example, if I sketched out what I thought this particular screen should look like. Just say, for example, it was like the login screen. And I said, okay, I needed two boxes, one for like email, one for password. I need a button that says sign in. And then I went back and said, okay, well, if they can't sign in, they might need a forgot password. So forgot password has to be added. But if they hit forgot password, what does that page look like? So I literally was like, every time I did one design, I was like, if they hit this button, where does it go? And that one screen might have taken me to four different potential screens. It might have taken
Right.
me to my login screen. It might have taken to my
That's fascinating
forgot
because
password. And so I just sketched it out.
as someone who, obviously is developed an app myself, I think a lot of us experience technology in a way that we use it, but then we don't necessarily realize how many functions and how many possibilities have to get built into the use of it. So you're right, when it's super seamless and you're using it, you're like, well, this is just the natural flow, but there's always these different ways you can go. And so I love you talking about how you had to think through all of those steps. Now, question, let's fast forward. Your current venture is Capway, and it's a financial tech company
Yes.
specifically designed to provide banking and financial education to the underbanked. And you, as I kind of alluded to earlier, are now the youngest woman in America to own and operate a digital bank. And so that's a remarkable, because as you said, your background's neither finance or tech per se. So will you walk us through, since you were just kind of walking us through how you developed the functions of your previous app, walk us through how the Capway app functions and why it was so important for you to have and present an app to this community?
Yeah, so with that first company that I built starting in college, that company took me from Mississippi to Silicon Valley, where I learned I learned the tech space. I learned from some amazing, amazing people who had built, multi-million, multi-billion-dollar companies. And I eventually left Silicon Valley and I moved to Austin, Texas. And, it was always interesting because I would go, of course, back home to visit. I'm from Mississippi. And I would go back home to visit family, spend time with family, and just noticing how money was handled differently, how people thought about money differently. when I was in the Valley or in the Bay, when I was in Austin around people who, had a wealth of knowledge. They had plenty of money. They were investors, or they had raised money, or they were founders who had exited, before. And, Terry, Mississippi, which is where I'm from, which is a little small town outside of Jackson. Mississippi, first off, let me say, Mississippi is actually number one in America for unbanked and underbanked residents per capita. And so I grew up where it was a lot of check cashing, payday lending. I had family members who never had a bank account. My great grandmother kept her money in her house. She didn't even, put her money in a bank. So I knew that world very well. And I didn't really notice the difference in that in the two until I left Mississippi and realized, okay, this is totally different how other people handle this. And so, for me it was like I I felt that I had a gift, and my gift was I knew how to build a tech company. I could go into the best of the best in Silicon Valley, and I could talk their language. I can learn from them. I can grow with them. I clearly built a tech company before that was successful, but at the same time, I also knew what it was like for your grandmother to keep her money in her house. And so for me, it was how do you combine those two and create really a life changing company, which is why I started, and what was the story behind Capway.
Okay, so let's peek under the hood, and to have an end-to-end digital banking platform, you need to offer obviously a seamless user experience. But how do you get people to buy into your point, and trust? Because to me, there's when we look at the financial system, we look at underbanked and unbanked communities. We look at communities that are proliferated, to your point, with payday lenders, et cetera. Obviously, folks don't trust the financial system. And so with a tech-based or digital-based offering in fintech in this way, number one, how do you get folks to trust? And then how do you educate folks about how to use it? In other words, how and what do I need to do to be able to participate in Capway and be a digital citizen in using my finances? If I'm somebody who's kept my money in the mattress and I don't even trust banking, let alone the idea that my money, I can't even touch it or feel it. How do you overcome those things? And I'm sure those are things that you thought about as you were developing the actual app.
What's really, really interesting is before I ever developed anything for Capway, before we ever even did a beta version of Capway, I did 2 years of research. And I'm not talking about sitting on my computer doing research. I'm talking like getting in my car, getting on planes, and going and talking to people who I might have said, "Hey, you might have a rush card before. Why do you not have it now? What did you like? What did you not like about it? You're preferring the check cash in place. Why do you prefer the check cash in place over, having a bank account? I talked to family members of my own.
What
I
are,
mean,
what are
when I
some?
tell
Give me
you,
some
I
of the
went,
things that people would say about those two answers. Like what? Why? Like from
yeah.
the outside looking in, maybe folks who are listening, like, how come folks would use payday lending when they could get on a bus and go 30 minutes and maybe find a bank? And isn't that a better if they're thinking about their time value of money? Isn't paying $250 to ride the bus 30 minutes better than paying 22% at a payday lender? How come people make that choice? In other words, will you talk about why payday lenders proliferate and why people ultimately choose to use them?
Two big things when it comes to the predatory economy in particular. So check cashing, I'll start with, and I also do payday lending. Check cashing is you have to understand institutional banking over the last few years, from as far as data that they finally put out over the last maybe 5 to 10 years. Banks have been making billions, and that's a B, billions of dollars strictly off overdraft fees. That's what it be. Once again, billions of dollars of overdraft fees. And mind you, the people who are paying those billions of dollars and that 32, 35, 37, whatever the bank charges for overdraft, they're the people who are living paycheck to paycheck. They're lower income, they're underserved, they're unbanked, they're underbanked. And so you get people from those communities and they finally come to this mindset that is, if I go to the check cashing place and I spend $10 to cash my $400 check, I have $390 in my pocket. Once my 390 is gone and I'm broke, I'm just broke. But if I put my 400 in this bank account and I have to go into overdraft, now I'm $32 in the hole, potentially 32 times four, or how many times they go into overdraft. So when they get their next check for $400, they don't have $400. They might have $290 because the overdraft fees immediately came out when their check hit that bank account. So for them, in their mind, their mindset is give up $10, and when I'm broke, give up X amount of 32, 35 times whatever at this bank. And it went to, I prefer to pay the $10. And so that's why check cashing places are very, very profitable. And in particular for this particular audience that, like I say, a lot of them are my family members. So that's more on the check cashing side. On the payday lending side, most people who are going to payday lenders, I mean, it's kind of like their last resort. We all have seen the numbers as of late of, especially for Black and Brown, the rate that we get loans. I mean, it's actually really, really sad. And so most of us can't go and get a loan. We don't have we can't go to family and friends funding because most of our families also struggle the same way that we are, and or they're just not. Maybe you borrowed money and didn't give it back. Whatever it's an array of different things, to be honest. And a lot of times when people are going to get that check cash, that payday loan, they know they're going to completely be killed on interest, and they know they're being robbed. But they're getting it because it's probably the difference keeping their lights on or their lights off. It's probably the difference in feeding their kids and not feeding their kids. Nobody's going to get a check cash, going to get a payday loan just to say I got an extra $400 in my pocket. People walk in there because they're desperate, and the people who run those payday lenders, they know people are desperate, and they've just taken advantage, and we've never had any regulations put in place to stop it.
Talk to us about how the technology of Capway addresses both the check cashing issue as well as the payday lending issue. And as you think about building out the platform, what are some of the things that you see on the horizon of either you're offering now or want to offer in the future potentially that can address some of those issues?
Well, number one, we don't do overdraft fees. Mind you, this is to be just frank about this. Most digital banks don't do overdraft fees. It's one thing that, as a whole, as far as the digital banking industry, we as a whole has now put a huge challenge up to your bigger banks, whether your regional banks or your big banks like your JP Morgans and your Wells Fargo. And I'm pretty sure a lot of us have seen like Capital One. I think they're doing away with overdraft fees, like starting like next month or something like that. I think TD Bank did away with like their overdraft fees because the digital banking space is now challenging them and saying you don't have to rob people through overdraft fees. But at Capway, number one, we don't do overdraft fees. So that has been, we get a lot of people who love that. If they're down to $1, then cool. Even if their account goes to negative $5, we don't charge them an overdraft fee. Of course, you can't use your card again until you bring it current. But they're gonna bring it current anyway. They're probably gonna get paid the next day, but they don't have to pay $36. Once they get their check. That's one. We do offer, once again, we're a digital bank, so we offer a debit card. But what's really important about building up Capway it's really important to me to build an ecosystem and not just a digital bank. And I say that because even for people who are completely unbanked, not even underbanked, people who are completely unbanked, I can give them a bank account all day, but just giving them a bank account does not put them on the true pathway to financial health. That's a piece of the puzzle, getting them banked. But there's so much more to getting them to truly being financial healthy. So much more to giving them true access and opportunities. And that's what Capway is about. We're about an ecosystem. Digital banking just happens to be a piece of the puzzle of what we're building. So digital banking, financial education. My grandmother always said, you don't know what you don't know. A lot of times people just make bad decisions because they just simply don't know. They was never given the information.
Capway builds many best features, amalgamates many best features into one app. Okay, banking functions, goal setting, even asking friends and family for funds. From a tech standpoint, how were you able to get all of that into one app? And what is that thinking of saying, hey, in the real world, there's this problem. We can use a tech platform like Capway to create this solution. How do we have to think about that link between the tech that needs to be built and the solution that can be brought to bear in people's real lives?
The truth is, even with the trying to convince people, and I say convince because there were trust issues. The pandemic changed a lot of that. and that was out of control of everybody. Well, I guess out of everybody. Depends on if you're a conspiracy theorist or not. But when the pandemic hit, of course, people kind of forced to use technology. You couldn't walk into your bank branch anymore because everything was shut down. So that was one thing about technology, that people was kind of forced into the digital piece of dealing with money. Particularly for us, and particularly for me, the CEO, or in my vision of building Capway from a technology piece, uh, getting access to do something so much quicker, something that you can do in your hands, something that you can see at all times. Now, mind you, you do have people who you spoke to it earlier. They want to be able to see their money. They want to touch their money. But the advantage that people can have, and what we've shown that they can have by being able to say, gosh, I need $5. And maybe the person can give you $5. It's not, your child or your neighbor or somebody that you can meet, at the corner store. Maybe it's somebody 3 states away. And the way you do this technology is the click of a button and somebody can send you $5. So there's things that I think people are, the pandemic sped up people really paying attention to the opportunities that technology does present. There are some people who still don't trust it. Some people will never trust it. My dad is 64 and he has a Capway account because I'm his child. But you know, probably if not, he probably would never touch technology in that way because that's just his old school mind of thinking. That's okay. But I think technology, without question, is showing people that there are true advantages um, that technology can present that was not available before. And we see that also because when we think about black owned banks, a lot of them have struggled, not necessarily because they haven't truly tried to reach the black community. It's actually because they lack the technology to keep up with today's times.
Well, to that point, the reason why I launched the Black Wall Street was to try to address the racial wealth gap, and that's why I'm so passionate about this. Do you think that tech and the evolution of technology is reinforcing potentially the wealth gap because there is a tech or digital divide? Or do you think that the opportunity that tech offers to solve some of these big problems can be broken open through decentralization and all that? Now, I buttress that with the question around the fact that we both know the data that black folks who are tech founders get less than 1% of the VC funding dollars. Black women get even less than that who are tech founders. So operating in those conditions, is technology and its evolution actually reinforcing gaps, or is it actually helping to close wealth disparities?
I think in an ideal world, I want to say that it helps, and I think realistically it does help, but that gap is very slow to close. One, let's talk about the fact that the net worth of the black family is actually predicted to go to zero versus getting better. It looks like it's getting worse according to the predictions and what data is showing. And the other reason I say that gap is there's an issue with that gap is because even when it comes to technology, and even when it comes to black founders who are creating this technology, I'll be realistic about Capway. Capway, the original idea of Capway was actually, how do I build a digital bank to help the unbanked and underbanked? Truth is now Capway is how we are a financial ecosystem, and we have people on our platform who make 6 figures. We have people on our platform who are of all colors. But if you talk to a lot of the black founders who create technology, we've had to broaden what we do because no one is going to fund in that degree. And that's the truth. Nobody might want to admit it, but I will. It's really hard getting funding by me going to an investment room and saying, "Hey, I'm building an app for unbanked to underbanked." For one, half investors have no clue what unbanked even means. And I've been asked that question, so I know that's the truth.
Right.
The second thing, they don't think there's any money in the space of unbanked to underbanked because off top, when you say unbanked to underbanked to most investors, they immediately equate that wording to poor.
Right.
And the truth is, everybody who is unbanked to underbanked is not poor. There's somebody who is unbanked who got 50K sitting in their house. They're not poor. They just don't bank inside of a traditional or institutional bank. It doesn't mean they're
Mm-hmm.
poor. A lot of people who fall within the unbanked, underbanked space is actually Midwest and in the South. And if you look at the data of even prior really popular fintech products, they were very dominant along the coastal areas. Your Californias, your New Yorks, your Bostons, your you know, no one was really dominating market share in the South and the Midwest in fintech. If anything, you think about the Bible Belt and people thinking everybody below the Mason Dixon line is, hillbilly and dumb and don't have any money. We're poor, which is why Mississippi is number one for unbanked to underbanked per capita. Texas is number one for unbanked to underbanked if you're counting bodies. So it's hard going to investors to say, hey, I'm trying to build this company around unbanked to underbanked. Give me $10 million.
So what did you say to investors to get your initial funding?
The initial idea, without question, was still how do I go in? How am I building a digital bank, unbanked to underbanked? But the truth is, the amount of people who actually understood what I was saying, the amount of people who understood also to the point they were willing to write a check was few and far between. Now, in the state of where Capway is now, where we're saying, yes, we still very much have a focus. We're still very much here to create access and opportunities for people who are unbanked to underbanked. But we're also creating access and opportunities for millennials. We're creating access and opportunities for Gen Z, for women, anyone who feels they're tired of either they're tired of the traditional banking system, or they feel left out, they feel overlooked. We've kind of had to broaden what we do and how we do it, because going in and raising $50 million by telling someone I'm trying to work for unbanked and underbanked, Capway was never going to scale that way. It's not from a VC model, because the world of VC doesn't trust that world enough to put that type of money behind it.
And now, a message from LifeLock.
No one can prevent all identity theft or monitor all transactions at all businesses, but LifeLock by Norton makes it easy to help protect yourself. So call 1-800-LifeLock or go to lifelock.com and use promo code 5Factor. That's lifelock.com, promo code 5Factor to save 25%. Protect yourself with LifeLock.
And now, back to 5-Factor Authentication with Hill Harper.
Speaking about Capway and what folks value or don't value now in tech spheres and often in the VC circles, you hear people just throw around the idea that data is the new gold. If you got the data, you got the gold. And so Capway's website is up front about data and collecting data. And I quote, "It is not to share just for the sake of making money from your data. We are using your data to challenge the current financial system. When your larger banks are looking at the existing data, know that that data doesn't always take into consideration people in rural needs, banking deserts, those of lower economic status, and overlooked people. We are using our platform and your data to change that." Now, how does that work exactly? And who are you choosing to share the data with, and what data is actually important? And do you agree that data is the new gold in this new time? I'll tell you about my driving experience as soon as you answer those questions. But how do you see data? How does Capway see data? And is it valuable to the company? Is it valuable to also use it to have a bespoke product for the consumer? How do you use it?
I mean, big data is big bucks. I think it's always been that way, honestly, though. That's why Facebook is who Facebook is. It's why Google is who Google is. They have the data. Big data equals big bucks. I mean, that's just the truth. But in particular for us, one thing I've in my 2 years research, I even talked to a few organizations who are I won't name them, but they're very known is for being a research institution, and we would have conversations around particular unbanked, underbanked, underserved, and I will always tell them, I was like, your data is actually completely wrong. Your data is telling you that this single mother is doing X because of this reason, and that's not the case. Or I tell a quick story in doing my research. I was here in New York, which where I'm right now, and I remember I had a conversation with a gentleman here, and he talked to me about he would get paid every Friday. He got paid, of course, in a check. We had to go to the check cash place and cash it. And he would say, when I get paid on Fridays, I go home, I get my gun, and I go to the check cashing place to cash my check. And I was like, well, why do you go home to the gun first just to go cash your check? And he said, well, he said, think about it. First off, well, he's in the Bronx, actually. So I'm in the Bronx. He said, but if you're walking down the street and somebody asks you for $1, $5, $10, you can easily be like, look, I ain't got it on me. Like, I don't carry cash. He said, but when you walk into a check cashing place and you walk out and somebody is like, no, let me get $5, you can't be like, I ain't got no cash on me. You literally just went in to get cash from the check cashing place. You went to go cash your check. It's those things, those real life moments. And it's just like when you get these institutional people who are doing research, I don't care if we're talking Harvard research, I don't care if we're talking Deloitte research, they missed a lot of realistic pieces, because even if they were to go and sit down with Hill Harper and his family, who was living on Southside Chicago and doing research, you're not going to sit there and act the way that you would act while somebody's sitting in your house trying to do a research or an experiment on how you handle your money. If I told you I'm going to come, and monitor you because you just got $5,000 back in your tax income, you're not about to go buy a Gucci wallet with the $5,000 while I'm sitting there.
And you're not going to tell somebody that you got 5,000 in a
Right?
shoebox under your mattress either. So I agree with you. You just reminded me of a story I don't think I've told ever. And this is way back at the beginning of my acting career. I needed to get some gold fronts for a role I was playing. And so I go into Brooklyn. This is long ago, back when Brooklyn was real tricky. This is Notorious B.I.G. days, Bronze. I was just Brownsville. It was tricky. New York was very tricky. Brooklyn was extremely tricky. But there was a place in Brooklyn where everybody would go to get their gold fronts. So I go to get my gold fronts, and I pick them up. And to your exact point, I walk out, and there were these three cats. They were like, and they start following me. And I start picking up the pace. They start picking up the pace. And I start picking up the pace a little faster. They start picking up the pace a little. I dive into a store, try to go out the back door. They start running, and I start running. And I just, because they definitely have a whole thing where we talk about data is the new gold. That was back when gold was the real gold. And they were going to take my gold, And I'm sure they've taken many people's gold in that same way. But the point is, you're right. There are people out there, and I want to make this point. The same guys that were out there trying to take my gold, they're the same version of those people in the tech sphere looking for people to hack, to steal from, to figure out a way to fake out, convince them that they are. How do you see the theft and the fraud and the stealing that's happening in the tech space, and how does Capway or you educate people to not get ripped off or taken advantage? And what do you think are the most dangerous areas for people to get taken in this new tech world?
A lot of times is when you can't raise money. I always tell people be very, very careful if you are at the place in the tech space that you have this VC model type of company, because mind you, every company is not a VC type of VC backed or VC model type of company. But if you do have a tech company that fits that VC model, I always tell, especially Black founders, be very, very just open and very weary of like when you're pitching. Now, mind you, I am not a believer that says like you should ask an investor to sign an NDA, because if you do, I guarantee you the investor's going to be like, I don't have time. Like, okay, cool. They hear so many pitches all the time. But the part that I say to be careful about is when you are pitching to an investor or an investment firm, and maybe your competitor is in their portfolio. That's one thing. You have a lot of times people will reach out for information. They're actually reaching out really to find out for somebody already in their portfolio, or they might share your pitch deck. So I mean, there's definitely ways, even on the early side of being careful. For us at Capway, we build majority of our tech in house. Just because when you're pulling in so many different APIs from different companies, mind you, by putting the API into your space, they're pulling data from all that you're building. Now, mind you, and sometimes that makes sense. I'm not trying to say that everybody should create all their tech in house. It's a lot of work, and sometimes when you're trying to move fast, you're trying to scale. It makes sense to go out and use somebody else's API, or work with another merchant. But there are certain things that for me, I was very, very, very headstrong on that. Was like, no, we're going to build it in house.
What are those things that you were like, we're going to build these in house?
Our dashboard. So the way that digital banks work is digital banks are not charter banks. Those are two different banks, two different types. So your charter banks is usually the bank you see on the corners, the banks that we know of. The once again, like your Wells Fargo's, your Cities,
And let's
your
be clear,
Truist.
I know what you're talking about. When you say charter banks, that means they have an FDIC charter, an actual federal charter that goes along with the actual banking institution. And neobanks or these challenger banks or banks like yourself, you can ride off of a charter of a traditional bank, but provide banking services and the solution as if you are the bank.
Correct. So now there's different. Everybody usually rides off of a charter. Now there are some digital banks that have like license. They have like a license they can operate off of. And there's different ways that it happens, but usually there's somebody there's some type of charter type of bank or a sponsor bank, a partner bank. There's different names, different ways to explain it. That's usually behind every single digital bank. I don't care what digital bank you're talking about. I don't care if you're talking about $1 billion digital bank. Usually that's how it goes. But for us in particular, when we built all of our building our stuff out, we decided not to go the BaaS route, which is BaaS means banking as a service. So similar to SaaS, most people know SaaS, not BaaS. But BaaS is banking as a service. And there are a few BaaS different companies out there: Treasury Prime, Bond, SnapsFi. And what that means is if you go through a BaaS product, pretty much, I want to say it this way: it's almost like you white label a card. It's like you put your logo on a card and somebody else does everything. The machine is behind you. You're kind of more of a marketing front, not necessarily running a digital bank. We didn't want to do that because I want to actually run my own digital bank. I wanted to be able to I want to control what I need to control to be able to build the ecosystem that I need to build at Capway to truly create financial access and opportunities. In doing that, there are other digital banks that also do it, but there's like no true dashboard that exists to be able to plug in if you're using different APIs, if you're building your statements in-house, which we build our statements in-house, if you're building the infrastructure of what you're doing in-house, which once again, for us, we built all the in-house. That's my dashboards, our statements, our money goals, which is like our roundup system. But of course, we're now going to start allowing people to donate money or contribute money inside of your money goals, even if they don't bank with Capway. Every piece of that technology that comes with all of that was built by Capway, is owned by Capway. It is our technology. And why that is so important, and it goes back to the question that you asked about theft and being careful and all those things. We decided very, very early it's going to take longer. We know some investors are not going to like it. We know some investors are not going to invest in us because they're probably saying, okay, it's taking y'all so long to build. And that is true, but we did that because we built our own technology. And now we're at the point now where we're doing what is called in the tech space dog fooding. So dog fooding means this is a company that built their own tech in-house. They use their technology to advance and build their own tools that are now consumer-facing tools. But by dog fooding, which means I use my own technology, I now can take the same technology that we built, that we use, and package it and create an entire infrastructure system for other fintechs to use.
So you can become the company that other fintechs come to white label, et cetera. So it provides a new revenue stream because you own the base tech. I love that. And that's what makes you so brilliant and awesome. And so okay, so we just talked about the dangers that you see facing tech founders. Now let's talk about the dangers facing the actual consumer, the actual user. So we store so much sensitive data in these platforms, and like our exactly like our banking information is one. And as you've proven, many tech apps are more than a luxury. They're actually a lifeline. So being hacked or cutting off from them can have profound consequences. How do you think about cyber safety for that person who's carrying their mobile phone and has your app as well as other apps on it? How should they think about cyber safety, and how do you think about it? And what should we do about cyber safety moving into the future?
I think the first thing is we have to be honest. I think that a lot of times when we, as consumers, we read and there's usually people saying like we have the best security ever and You can trust us. At Capway, if you look at our website, you look at our app, we try to be just as blunt and transparent as possible, because I feel like in the end, people are going to trust you more if you're just upfront with them. And one thing that we do, and by saying that and being upfront, is if you live in this world, unless you literally live in the middle of the woods, in the middle of nowhere, you have no phone, no debit card, no nothing, no true way of connecting with the world, that is the only way that you are ever completely protected from any form of potential hacking. Because every week, Capital One was hacked 2 years ago was a big deal. Robinhood was hacked maybe a few months ago. Everybody to some degree gets hacked. So unless you will literally live in the middle of nowhere and have no communication with the world, the potential for you to be hacked is there.
Shouldn't that make me really scared though? If I have money in a digital wallet, or I'm working with any kind of company where my money or my investments being stored, and I feel like someone could potentially breach it and zero me out, and what recourse do I have? Should I be scared? Should I be like, oh, maybe it's better to keep my money in a mattress? I mean, how should the person, the user, think about that then? If being out there leaves you vulnerable, and there's a lot of smart people out there that are hacking really big companies, shouldn't I be scared?
I mean, I won't tell you that you shouldn't be scared. I think that's not realistic. But companies, I'll just use us as an example at Capway. We go to the extremes when it comes to cybersecurity. That's from everything to, does everything across the board match? Does the email you signed up with match the email that you connected your bank account with? Does it match the phone number? We go to like the extremes of the extreme as far as like cybersecurity. And cybersecurity is actually, side note, if you're looking for a field to get into that makes a lot of money, cybersecurity is that field that you should look into. The advancement of cybersecurity is actually only getting better also. Now, mind you, I always tell people that it's a game of chess. The hackers, they make one move, and then the people who are on the good side, they make another move, and it's a chess play. But as technology gets better, cybersecurity will increase. It will get better also. So whether that is two-factor, whether there's like authenticating
What about
apps that are out
5-factor
there,
authentication?
whether it is making, we might get to 10 eventually. It's gonna the thing that people are really scared of, and it does have its good and its bad. Let me say that. But the one thing that probably is one of the ones that I think is a super way of protecting ourselves, but people have their ifs about it, is actually biometrics, thumbprint, facial facial recognition. I don't know if anybody follows like international like finance, but in like China, like you can pay with your eyes. Um, Biometrics. People are freaking out now because I think Amazon is testing out like paying with your palm. From your identity based off of your palm print. Biometrics is by far, I think, at the stage that we're at now, is top security. However, once again, there are people who have their pros and cons again.
Well, I was actually talking about that too recently, and I don't want to get too much into my personal life here, but the thing is that isn't there something where I think you should only be able to open your phone if your eyes are open. Because if you're asleep and someone could walk over and use your face to open your phone, and what happens if you're passed out asleep and all of a sudden they're in your phone? And that can speak to a trust issue that you have with your partner, but that's a whole different thing. But I'm actually speaking about my son, because my son is only 6 years old and he's very smart. And he may be like, Daddy, just go to sleep. I actually want to get on YouTube. I say, no, Pierce, you can't get on YouTube. But yes, he waits till I fall asleep. He uses my face. He's on YouTube. So I think your eyes need to be open. They should be open for your phone to unlock. Now, because it's hard to hold both eyes open and somebody not, wake up.
That's what I'm saying. Biometrics is probably one of the most secure ways right now, but there's gaps in that. We've all seen, or we probably all know a couple that somebody goes to sleep and he or she goes and takes their finger and I put the thumbprint and or the face, or so there are gaps. But that gap is a little bit different because if Pierce comes and uses your face for YouTube, or if John's wife uses his thumbprint to open his phone, that still is a little bit different from someone in, I don't know, somebody in Wyoming, hacking into your account if you live in Florida, because clearly they can't use your face or your thumbprint. Now, mind you, even synthetic IDs and all those things do exist, but biometrics, I think, is probably one of the ways that we think, at least in the finance space, that might be one of the most secure. But so cybersecurity is advancing every day. But like I said, I won't lie. I'm not going to sit there and tell someone that the potential for you to be hacked, the potential for someone to get your information is at a zero, because that's not realistic. And if you tell somebody that it's at a zero and then it happens, they lose trust across the board. So I would never do that. But cybersecurity is without question advancing as technology advances.
And do you think when we think about communities that Capway serves, are there different cybersecurity concerns that those communities have that other folks may or may not have, or do you think it's kind of it's the same across the board?
I think there's a lot more trust issues. It's not even necessarily just in unbanked, underbanked, underserved. I think there's just more trust issues, in particular the black community, because we've been mistreated as far as the traditional banking system for forever. I mean, it's like just the timing of forever. Whether that was back in slavery times when we were assets, we were considered assets. We couldn't, of course, we couldn't go to the bank and get anything, but
And then
they took us to
Freedman's Bank
banks.
coming out of
We were
there.
assets.
Yep.
What happened with Black Wall Street. We talked, you and I, even offline, we talked before, the 5, 6, 7 that people even talk about. We talk about Tulsa, which is great because we need that information to be out there, and we want people to know what happened when they dropped those bombs on a thriving Black community. But there's a lot that was like that doesn't get the same recognition. But my point is, I don't think it's about unbanked, underbanked, underserved, overlooked, millennials, Gen Z. I think if it comes down to the core of it overall, I think it's actually just a mistrust within the Black community, which we have every right to have that mistrust because of what history has shown us.
When you look to the future, you'd said earlier you're a non-tech founder, but you really are a tech founder because you know your stuff, right? You may not be actually sitting there writing the code, but you know exactly what you're doing. You understand tech flows, you've done your research. So I don't buy into being the non-tech founder. You are a tech founder, which I think is awesome. But so tell us about what the future holds. Where do you see us headed in terms of technology, in terms of using tech, and in terms of whether it's fintech or in general? How do you see this interacting and operating in our life and in our world?
I do think it closes a gap. I don't know if it closes the wealth gap to the point that I think it should be able to close. I don't know if that is where we are quite yet. But I agree with the late Nipsey Hussle. He said tech is the next gold mine, and as Black people, we got to get on board. And so I think that one thing that a lot of us work towards as Black tech founders is trying to take it out of the world of just technology, and how do we start to get in front of the face of like the entertainment world or different pieces, because I think about even my niece and my nephews who range a wide range. They range all the way from 1 to 24. But even with the older ones who are more that Gen Z age, they're not really looking up who's like the cool tech guy or the tech girl. They're esports is cool and TikTok is cool, social media is cool, music is cool. So I think that the beauty of technology, I think the beauty of culture for Black founders is we're finding ways, creative ways to get in front of this next generation to inform them, to let them know that regardless of your background, regardless of where you come from, regardless of your economic issues that you might have had yourself, your coming from your parents, whether you're from the country, a rural area, the hood, the city, the suburban area, you have ideas, you have things in your mind that the world needs. Like the problems that you could solve because you have them and you think only maybe you have them. So many more people have those same problems. So my problem, or what I saw, was I have family members who don't have bank accounts. There's a lot of people in America who don't have bank accounts. I had to take that and realize that I can this can be something really big. And I think that a lot of times we discount it because, um, when people talk about the word tech, we talk about Mark Zuckerberg, we talk about Elon Musk. No one's necessarily talking about a Black founder who's come from Detroit, who's come from Southside Chicago, but they do exist. But I think I'll say, for me, I think that technology will solve that gap, and I think it is the tech founders of today, particularly the Black tech founders of today, that we're finding creative ways to get in front of more of where the next generation is: entertainment, music, social media, and giving them insight into a different world.
Well, I'm gonna shout it from the rooftops that Mark Zuckerberg got nothing on Sheena Allen from Mississippi. So that you are, to me, the tech superstar and the next tech superstar. So I love that. Thank you for this, but I'm not gonna let you quite off the hook. This is almost like the prologue, the back end. Now, this is, if you're thinking about your nieces and nephews, I want this. We're called 5-factor authentication. I want those 5 words or 5 factors that you think impact your life the most, as far as forward-looking, as far as motivation, as far as impact-driven. It could be a saying, it could be a word. Give me those 5 factors about living an authenticated, authentic life.
Consistent.
Consistency.
Got to be consistent. Believe.
Belief.
Faith.
Faith.
Persistence.
Persistence.
Love.
Love. I love that. Beautiful. Thank you. Thank you. Thank you. Y'all who are listening to this or watching this, remember those 5 words, because those 5 words to me are what makes Sheena Allen special, but also what can make any of us special and work and grow. That's 5-factor authentication. That is a discussion with the great Sheena Allen, and you have officially been authenticated. Sheena, thank you so much. Thank you for taking your time, spending the time. You're busy. You're a CEO. You're a tech founder. You're in New York City doing your thing, and you cut out time for us, so we thank you so much.
Thank you for having me.
Is it safer to do banking on my computer or my phone? Staying safe while online banking depends on several factors, but these tips can help protect yourself. Learn more from Norton at 5factorauthentication.com/Sheena Allen.
Okay, wow. Now, I'm going to give you my 5-factor takeaways from my conversation with Sheena Allen on online banking and being a tech founder. And let me just say, it was so inspirational. Talking with her made me realize how no matter who you are, no matter where you're from, you can impact the world. You can have impact and legacy. You can create businesses. You can be an entrepreneur. You can be somebody who leans in to solve a big problem. So here we go. 5-factor takeaways. Factor 1, you don't need to have technical skills to be a tech founder. That's right. Whether you sketch it out on an app or on paper or conceptualize a whole new service offering, all you really need is a problem and a vision for a solution. The rest you can figure out with the right partners and the help of Google. That's right. Factor 2, data is gold, but big data still misses a lot. That's right. To understand people's needs and design products and services to meet them, you have to go out and talk to them, see how they live, and truly seek to understand their day-to-day reality. That's how you reach untapped market segments. Factor 3, there are still gatekeepers. Tech companies are often supported by venture capitalists who have their own interests, preconceptions, and biases. Relying on them for funding doesn't just affect who gets funded, but can shape the ultimate product or service offering. And factor 4, cyber risk is inevitable, but doesn't mean we're powerless. We live in a global society, and with greater interdependence comes greater risk. No company can guarantee it won't get hacked. But as we need it more, cybersecurity technology is improving, and that should reassure companies and individuals alike. And finally, factor 5, technology means opportunity. That's right. Tech has been and is the next gold mine, and it can be a powerful tool to help close inequity gaps. The founders of the next generation may not look like Zuckerberg or Musk, but they are starting to understand that if they have a problem, others have it too. And solving it with tech is a huge business opportunity. Those are my 5 takes from my energizing and inspiring conversation with Sheena Allen, a tech founder, on digital banking and how technology is affecting inequalities. Thanks for listening. And make sure you follow 5-Factor Authentication Podcast